How to create a successful financial plan for small business owners. So before we get started, make sure to hit that like button and subscribe to my channel. Setting financial goals. As a small business owner, it's important to have a comprehensive financial plan that includes both short-term and long-term goals. Your short-term goals should be focused on things like cash flow and working capital, while your long-term goals should be focused on things like retirement planning and estate planning. One of the most important aspects of setting financial goals is to make sure that they are realistic. It's important to set goals that you can actually achieve. Otherwise, you'll just end up feeling frustrated and discouraged. Once you've set your financial goals, it's important to start working towards them. This may mean making some changes to your spending habits or finding ways to increase your income. No matter what your financial goals are, remember that it's important to have a plan and to stay disciplined. With a little hard work and dedication, you can achieve anything you set your mind to. Determining your starting point. When it comes to financial planning for small businesses, the starting point is often the most difficult to determine. This is because there are a number of factors that need to be taken into account, including the business's revenue, expenses, and debts. The first step in determining your starting point is to calculate your business's revenue. This can be done by adding up all of the money that your business brings in on a monthly or yearly basis. Once you have your business's revenue figured out, you can begin to look at your expenses. Once you have a good understanding of your business's revenue and expenses, you can begin to look at your debts. This includes any money that you owe to creditors, such as loans or credit cards. Finally, once you have all of this information figured out, you can begin to develop a financial plan for your small business. This plan should include a budget, as well as a strategy for how you will use your revenue to cover your expenses and pay down your debts. Developing a comprehensive financial plan for your small business can seem like a daunting task. However, by taking the time to figure out your starting point, you can develop a plan that will help you reach your financial goals. Managing cash flow. As a small business owner, you know that managing your finances is vital to keeping your business running smoothly. But what exactly does financial planning for a small business entail? One of the most important aspects of financial planning is cash flow management. Cash flow is the movement of money in and out of your business, and it can be a challenge to keep track of. Every business has a different cash flow cycle, which it is the time it takes for money to come in and out of your business. Knowing your cash flow cycle can help you better plan for expenses and manage your cash flow. Small businesses are the backbone of the American economy, accounting for more than half of all private sector jobs. Yet, despite their importance, most small businesses struggle to access the capital they need to grow and thrive. There are a number of reasons for this. First, banks have become increasingly risk-averse in the wake of the financial crisis, making it harder for small businesses to get loans. Second, many small businesses don't have the collateral or credit history that lenders typically require. Protecting your business. As a small business owner, it is important to have a comprehensive financial plan that includes strategies to protect your business from potential risks. While you can't predict or prevent all risks, there are steps you can take to minimize the impact of potential threats to your business. One of the most important aspects of protecting your small business is to purchase adequate insurance coverage. Insurance can help protect your business from a variety of risks, including property damage, liability claims, and loss of income. Make sure you understand the types of coverage available and purchase a policy that meets the specific needs of your business. Another important way to protect your small business is to establish strong internal controls. Internal controls are procedures and policies designed to safeguard your assets and prevent fraud and misuse of company funds. Implementing effective internal controls can help you detect and resolve problems before they cause serious financial damage to your business. In addition to insurance and internal controls, there are other steps you can take to protect your small business. Establishing a good relationship with your banker can help you obtain loans and lines of credit when you need them. Maintaining a healthy cash flow will give you the resources you need to weather unexpected setbacks. And finally, staying informed about changes in the marketplace and the economy can help you anticipate problems and take advantage of opportunities. By taking steps to protect your small business, you can reduce the impact of potential risks and keep your company on the path to financial success. Putting it all together. As a small business owner, you wear many hats. In addition to being the face of your company, you're also responsible for its finances. While this may seem daunting, creating a comprehensive financial plan doesn't have to be complicated. By taking some time to understand your business financial picture and implementing some best practices, you can set your business up for success. The first step in creating a financial plan is to understand your current financial situation. This includes understanding your income, expenses, and cash flow. To get started, take a look at your last 3 months of bank statements and credit card statements. Make a list of all your income and expenses. Be sure to include both fixed expenses, like rent or insurance, and variable expenses, like marketing or travel. Once you have a clear picture of your income and expenses, you can begin to forecast your cash flow. Cash flow is the lifeblood of any business, so it's important to have a good handle on it. There are a number of different ways to forecast cash flow, but one of the simplest is to use the cash flow template in Excel. This template will help you track your income and expenses and predict your cash flow for the next 12 months. Once you have a good understanding of your current financial situation and cash flow, you can begin to make plans for the future. For each goal, identify the key actions that need to be taken and the timeline for taking them. Then, start putting together a budget for each initiative. This will help you keep track of your spending and make sure you stay on track. Once you have a goal and a plan, it's important to track your progress. This will help you course correct if necessary and celebrate your successes along the way. There are a number of different ways to track progress, but one of the simplest is to create a dashboard in Excel. This dashboard should include key metrics like sales, costs, and profit margin. Update it monthly so you can see how you're doing. If you enjoyed this video, don't forget to give it a thumbs up and subscribe to my channel for more content. Hit the notification bell to stay updated with my latest videos. Share your thoughts in the comments below. Thank you for watching.